안녕하세요. 누구나 경제적 자유를 이룰 수 있도록 내부자 정보를 가장 빠르게 알려드리는 이자입니다.
Yeah, so first, thank you for having me, and hello to the Izar. RecShares is a United States ETF provider, so we create products that are innovative, interesting, whether it's for trading types or for buy and hold investors. So we have a series of levered and inverse products. We created the Microsectors brand and the T-Rex brand, as well as created our own covered call suite, which is by our flagship product called FEPI. Yeah, so we launched a series of covered call products, and our goal was to just be different than what's currently out there. I think a lot of covered call products really struggle because they're index based, so you're basing everything on index volatility. So what we did is try to create pockets of sectors that are super interesting to investors and create a covered call strategy around that. So with FEPI, we own the 15 largest stocks, big tech stocks, and we're selling calls on the individual stocks. So that does two things. One, stock volatility is much more volatile than index volatility. So we're able to strike the calls further out of the money to allow for NAV appreciation, which is something that a lot of covered call strategies struggle with. The second part of it, because it's so volatile, we're also able to pay a distribution rate that's well above what a lot of the other products offer. Great question. So for FEPI, we launched in October, and our distribution rate annualized is over 25%. So we've been paying just over 2% per month since launch. For AIPI, we just launched this week, so we don't have a distribution rate set yet, but I think it's safe to imply that AI stocks are a little more volatile than the Fang & Friends basket, so I would probably expect it to be a little bit higher. We don't have one as of yet, so we literally just struck options yesterday. It's tough to annualize that just yet, but again, I do think it'll be slightly higher than what FEPI's is. Yeah, so specifically for JEPI, that is the classic traditional covered call strategy. It owns a big basket of stocks, S&P based, and then it's selling S&P volatility. Now, if you look at like the VIX, you'll see S&P volatility is quite low. So JEPI's distribution rate, I believe, is right around 8% right now. And because they're striking volatility and they're striking the calls slightly out of the money, you don't really get a ton of NAV appreciation. So JEPI is actually one of the reasons we kind of came up with our strategy, like I just discussed, how we trade the holding, the stocks themselves, and we trade the volatility on the stocks themselves. So that is just more volatile. So our stocks of the 15 stocks that are within FEPI are the 15 stocks comprising the Solactive Fang and Innovation Index. Those 15 stocks are about half of the NASDAQ 100 in terms of weighting, and about a third of the S&P. So I think we're garnering a big chunk of what pushes the U.S. stock market, and we're capturing the volatility from them. So it's quite a bit different than JEPI, and Tesla is a single stock covered call strategy, so you're wearing single stock risk. I think it's one of those things where, yes, it's a covered call strategy and pays an above average income rate, but you do have to like almost watch it as if it's like a day trading vehicle because you're wearing significant single stock risk. So our idea is to have a big Fang and Friends kind of basket for FEPI and serve more as like a buy and hold kind of strategy while paying above average coupons. And AIPI is basically following that same script with FEPI, except the underlying basket is about 25 names that are related to the AI industry. Yeah, I think, specifically in the United States, but also around the world, everybody's been battling inflation over the last bunch of years. So we've seen, federal banks around the world kind of raising interest rates in the face of inflation. And so you're creating this fixed income volatility. So, around the world, these covered call, or what we refer to as like alternative income strategies, have been really coming on strong in the last couple of years. Just for example, in the United States, covered call strategies or covered call ETFs only had about $1 billion 4 or 5 years ago. Now it has about 75 USD billion dollars. So we're seeing this growth and acceptance of alternative income just because there's just so much volatility in fixed income.
아래 설명란 링크에 이자 앱을 다운로드 받으실 수 있습니다.